Matthew here with the Forecast Edge. Today we are going to go over our most recent edge alert, which is going to be the Eurozone put shot. And again, if you are interested in gaining access to these edge alerts, all you need to do is go to our website, theforecastedge.com, and on the top right hand side of your screen, you'll see Join the War Room. That's where you'll select which plan's right for you, and then you are granted access to these edge alerts via our Substack and Beehive. Today, we are going to be using it through our Substack. Again, we have over 132 individuals in our trading community at the moment, and we are, again, always happy and encourage more traders to be a part of what we got going on here at the Forecast Edge. So, with that being said, let's jump right into our edge alert. And this is exciting stuff. We'll also go over the returns that we've been seeing on our recent edge alert, which was going to be our Carnival cruise, and we'll show you in a moment. But to get into the Eurozone put shot, here is the thesis. This is the unhedged energy tax, okay? The geopolitical landscapes have structurally fractured. And with this being said, we mean with the Middle East conflicts expanding and the Strait of Hormuz on and off line, okay? The Brent crude is violently repricing towards the $95 to $100 plus threshold and price range. And the U.S. administration has confirmed these strikes could last several weeks. Okay. This is not a temporary headline. It is a sustained macroeconomic supply shock. Okay. The primary victim of this shock is not the U.S. consumer, it is the German industrial base. Now, check this out. We are issuing an aggressive high convexity short deployment targeting the European stagflation. All right. Here we go. EU, the vehicle. Why we short Germany, not the euro, okay? Retail traders are currently piling into direct euro currency shorts, which is off of FXE, ticker FXE, excuse me, to play this crisis. This is a level 1 option trap. The central bank buffer. The fiat currencies are heavily defended, right? The European Central Bank, ECB, will deploy sovereign level hedging to defend the euro, okay, creating a sticky floor. If you buy the FXE puts, the currency will slowly grind down 2%, right? And theta, the time decay, will bleed your premium to zero before you can take profit, okay? Now, here's the kinetic proxy. We are doing our positions on EWG. The ECB can manipulate currency markets, right? But they cannot print crude oil. Germany is the industrial engine of Europe, completely reliant on imported energy. When Brent crosses that $100, so when the Brent crude oil crosses the $100 range, German factories physically halt. Their massive export surpluses evaporates and the corporate earnings compress violently. Now here is the mathematical reality. Equities move 3 times to 4 times faster than currency, okay? And again, by equities, we are talking about financial instruments and things of futures contracts, predictive market contracts, and or option contracts. But check this. Again, we are taking our position on EWG. By shorting the iShares MSCI Germany ETF, EWG, we outrun theta, the time decay, and capture a highly volatile kinetic gap down that a currency ETF simply cannot provide. All right. Now, here is our execution matrix. We're doing a 60-40 aggressive stack again, okay? To aggressively maximize our upside profit potential while securing our delta exposure, we are bypassing the short duration April contracts and targeting the June 18th, 2026 expiration, which is 105 days, which is awesome because then we're not pressed and or stressed on the time that we have to use when taking these positions here. So time is on our side in this contract. This gives the Hormuz catalyst the structural runaway it needs to completely break German economic data. Okay, now here is leg 1, 60%. So I took one of each leg, but if you are taking and how the structure works for this is 60% allocation on this first leg here, and the contract will be the EWG June 18th, 2026 $43 puts, and our edge alerts went off for an entry price, a limit order of $3.05 to $3.10. And here's the logic. At $40.85, this deep in the money, right? ITM, again, trading terminology, ITM is in the money. Um, we've nailed the exact definition. It acts as a synthetic short, right? Spread is tight, so the fill probability is high, and it gives you the maximum downside traction from 1 minute. Okay, so we'll go back to our chart here, right? EWG, it's trading exactly where our edge alert is addressing. So we'll put our price here, right? Easy money. Go back to our edge alert real quick. Again, $40.85 spot, right? And this is exactly what we got it trading here right now, except we're at $40.84. Okay. We got our spot here. Now, here is the second leg. This is the convexity kicker. 40% allocation on this leg, which is going to be the EWG June 18th, 2026 $38 puts. Okay, so we have the $43 puts and we have the $38 puts. That is what we're looking at here. And the target for these ones is $1.40 to $1.55 limit orders. That's how we got in. And I'll show you here when we got filled on these positions this morning. Ours were filled at $1.15 here, and then or excuse me, $1.31 here and $3.70. Even though so I got filled almost 60 cents higher than leg one and just about 25 cents lower than leg two. So yeah, a fair trade-off there. Now, this is the logic on this trade. This is where the liquidity lives, but the spread is wide, so be patient. Buy the cheapest premium on board and still maintains a realistic proximity to do the spot price, which is trading exactly what we said at that $40.85 right now. If the Hormuz pressure forces a true capitulation, um, in Germany equities, this 40% allocation will generate the hyper convex for a return on investment that makes the entire position explode. Okay, now here are our watch points. The euro and versus US dollar for the forex market stays below the dollar and two 1.02 abort trade, right? So if it's under, the euro and US dollar spread is under $1.02, we're killing the trade here. Okay, if Brent crude oil is rising and euro and US dollar is falling sharply, we'll also be exiting this position. Again, just because we have to say it, we are not CTAs, we are not CPOs. This is not financial advice. Option trading involves significant risk and can result in the loss of total premiums. But what we are doing is we're presenting and sharing the trade idea that we are taking here at the Forecast Edge on our own accounts. It's just we're sharing the exact thesis, the reasoning we're getting into these trades. We're sharing the exact contracts that we are taking ourselves. And the most important piece is that we're sharing the risk management that we are taking here as our own individual traders and our own investors at the Forecast Edge. Now, the euro, here's the logic again, right? Here are our two rules of engagement here. Now, here is the logic. The euro is plunging alongside the oil spike. German exporters are getting currency relief. The EWG drop will be shallow and slow, but we will abort the level one option trade because theta will likely outpace the underlying equities decline. Okay. Now, strategic summary. The defend edge is front running the $100 Brent crude trigger, right? By bypassing the sluggish currency markets and using a 60/40 June option stack to turn German industrial fragility into aggressive defined risk convexity. Don't just predict profit. Okay, one more time, not financial advice. And options trading does involve significant risk and can result in the loss of total premium. But again, as you can see, we put these positions on earlier today. And with the three option plays that we have going on here at the Forecast Edge right now, we are up in total $352 by weekend here. Okay. Now, this was the Carnival Cruise play that we put on here, right? So this was the Carnival Energy Consumer Squeeze, right? We already got into these plays on our last episode of the midday broadcast. But still, it just goes to show that when these are firing off, we are getting involved with these plays just the same and managing them in front of you guys. We don't want you guys feeling like you're um being left high and dry. The exact plays that we're going over and the exact contracts that we're trading with the exact risk management we are going to be using when taking and executing these positions, we will be transparent. We are going to tell you exactly how and why we are doing the things we're doing when it comes to the positions that we're taking here. Now, we're going to do the euro dollar. Just going to get this going for myself. Euro, um, here's euro and American dollar. That's what we want. Okay. Let's see. And as long as this is above a dollar 1.02, we're good. And it's sitting pretty. Both of our positions here are great. We have our I mean, look at this. Even at the start of the week where we said we were up here at the 29 level, now we are trading at $25.77 with that $24 price magnet that we are looking for at the end there, okay? So let's see this overall the market MES. So this is going to be again the SPY's down 8.5 points, Q's being down 8 points, right at that $600 range or the 600 level. The futures contracts for the S&P 500 are down 88 points. The MMQ futures contract for the Nasdaq's down 350, Russell 2000 down 60, Dow Jones down 40, gold being up almost 85, and crude oil up $9 at 90 dollars and 57 cents. Incredible. Here, all of these are great plays that we've been doing. Here's your BNO still going off. Um, and again, as the week in the trades progress into this upcoming trading week, we will be managing and adjusting the rules of engagement on these positions as we always do. So, with that, we had a very good week here at the Forecast Edge. Again, if you are interested in having access to, like we said, 16 wins and 4 losses right now, we're at an 80% win rate. And in total on our money, we have made 261% year to date. Again, the year is just starting. We're about a quarter of the way through our trading year, if you would, and again, already up over 250%. So all you need to do if you want to have access to our trading community and our edge alerts is go to our website, theforecastedge.com. Again, on the right-hand side, you'll see Join War Room. That's where you'll select which plan's right for you, and then you'll be granted access to these edge alerts and to the trading community via our Substack and our Beehive. So with that being said, don't just predict profit, and we will catch you guys in the next one.